Okay, I am showing us right at 12 o'clock. So I'll officially kick things off and say welcome to session 10 in the Yellowbook training series for 2025. I'm Rachel Windett with Sikich University, and I'll be on to support you all today. We also have Rachel Hawley with us. She and I will be screening questions and comments as they come in. And again, on the note or on the materials, take a moment and download those. They are attached to this meeting. For CPE today, we will have 3 polls. As they come up during our session, make sure you complete all 3 as they are required for CPE credit. If you're joining us via browser, ensure that you're set to full screen, as those polls can sometimes be hidden if your window is minimized. You can expect CPE certificate within 5 to 10 business days at most. That will come from the sender certificates at conferences.io. I mention that because it does sometimes get held up in spam, so keep an eye out for that. And again, it's certificates at conferences.io. This recording will be made available on demand in a few days following this event. An email will be sent out with that information. So for this session, we welcome back Matt Geerdes and Anthony Cervini. We've seen them throughout the year, and I do want to shine a little light on how amazing these leaders are. So Matt, he's a principal and a public accounting leader with over 24 years of experience providing auditing consulting services. Matt actually just celebrated his 1 year with us here at Sikich. In the time he's been here, he's led 5 Yellowbook trainings and several internal trainings. He brings an authentic energy to the firm, and that is something we all really appreciate. Anthony, he is a principal as well here and a local government audit leader. He is responsible for providing technical services to Sikich's governmental clients. When he's not supporting the firm, he is supporting other great causes such as the Naperville Area Humane Society and the Alzheimer's Association. He is a key leader in our annual firm-wide Walk to End Alzheimer's campaign. Anthony and Matt bring that authentic leadership and genuine commitment to exceptional client support while creating thriving teams here at Sikich. So thank you, gentlemen, and I will hand it over to you.
Wow. Well, thank you for the kind words, Rachel. That's very much appreciated. So, well, it's kind of hard to believe we've been through, collectively as a group, 10 of these Yellowbook sessions now. So, and we're not done yet. So stay tuned for next month. We got one more one where we're going to recap of what's coming down the pipeline for GASB. So, but let's talk a little bit about what we're going to be doing today. So, as mentioned before, Matt Geerdes, principal with our local government team. And yes, it's kind of hard to believe I have been with Sikich now for 1 calendar year. Time flies when you have fun. And it's one of those where I legitimately mean that, because not only do we have a great group of people, technically we work well with our clients, but they're also a great group of people to hang around. So a little plug for the firm. So Anthony, why don't you go ahead and introduce yourself?
Thanks, Matt, and certainly appreciate Rachel's kind words, and thankful to have the opportunity to be with you all again today. Thankful to have, obviously, Matt here at the firm with us, and going to go down a topic today. It's an interesting one. There's a lot more to come on this one, so we're excited again that you've taken some time out of your day to spend with us, and I'll turn it back over to Matt to kick things off.
All right. So let's go over our agenda and specifically what we're going to be spending our time together focusing on. So that's going to be the Financial Data Transparency Act, the FDTA. So we'll walk through specifically where this started, what are the current requirements, and what was built into the law. And this is a law. This was adopted by Congress. We'll then focus on what were some of those reactions to the FDTA? And we're going to do this in buckets per se. So we'll have the issuers and preparers of the financial statements. Often the auditors kind of get lumped into this, but we'll for this purposes, we'll include that. Then we'll look at specifically the users of the financial statements and understand where their perspective is as far as the FDTA. And then, of course, even though this is not a GASB accounting requirement. The GASB has, needless to say, chimed in on this because a lot of what they do is going to be impacted by this. So we'll talk about the current state of affairs. Where are we at as of November 19th, 2025? And yes, we did update everything through today to see what's the latest and the greatest. And then we're going to walk through a couple of examples of what it means for the application of the FDTA. And something you're going to hear quite a bit is something called data tagging, because that's the basic crux of what this act and this law requires. So we'll do some local government examples. Now, this is something that, again, it's fairly new to local government. So, we'll go through some of those initial examples, and then we'll pivot towards something you would see actually over on our partners in the SEC and the public company space with those SEC filings and the EDGAR system, because the fact that that system is a lot more robust, it's mature, it's been around for quite a bit of time, and even during the recent government shutdown, public companies still had to comply with their SEC filing deadlines and dates, even though there wasn't anybody at the SEC to actually look at them. However, they still had to be published on EDGAR on time with the data tagging requirements. So we'll walk through a little bit of some examples of what that looks like and potentially how it could flow over towards the local government space. Of course, taking into effect that local government and public companies are two very different animals. And then we'll have time for a Q&A session as well. But of course, as you have questions on the presentation, please feel free to include those in the Q&A function, and Anthony and I will walk through those as we see them as well. And depending on time, we may answer it right away, or we'll save it for the Q&A session. If we don't have time to get to it, we will respond to your Q&A individually through email. All right, so since this is a CPE session, we have to get those lovely polling questions in there. So why don't we open up that first polling question, and everybody can take a look and respond. And it's, how familiar are you with the FDTA? So Rachel, why don't you talk a little bit about that and kind of facilitate that while I get this tickle out of my throat.
Yeah. So if you can answer that poll, are you very familiar, been monitoring the rulemaking process, somewhat familiar and beginning to explore, or not familiar and attending to learn more? Right now, we have about 66% are not familiar.
Okay.
A couple more seconds to get those votes in. Remember, it's required for CPE. Okay, I'm going to close the polls, and we landed at 64% not familiar, followed by 31% was somewhat familiar, and a small population are very familiar.
All right. And I must admit, the smaller population being very familiar with it is about what I was expecting, because of the fact of where the current state of affairs is at and the enactment of the actual rules that were basically required to be adopted by the FDTA. So, all right, let's get in and let's go to our first section of our agenda, which is an introduction to the FDTA. So for our first section, let's talk a little bit about an overview of that FDTA. Now, this was an act, it was enacted by Congress as part of the National Defense Authorization Act for fiscal year 2023. So that is something, it's a public law that you can see the reference down there. It's like 117-263. So what happens is that at the end of the year, Congress enacts authorizations for typically it's national defense. But this is something what's often called to be people call it like a Christmas tree act, because a lot of times there are a lot of riders and projects with this bill. So even though the name of it is talking about national defense authorization, there's usually a lot more stuff that's in here as well. If you think about it from the GASB accounting rules perspective, it's almost kind of like one of those omnibus standards where it's got a lot of different things that are in there that may not exactly focus on national defense. But anyways, that's how this came into play. So this was something that was brought into play and was passed and signed, and something that honestly a lot of folks in the industry were very taken by surprise that this was even adopted. So once everybody read the act and people started realizing this was in there, it was included, needless to say, industry is starting to react to this thing. So now, this thing was issued because historically, we're talking about financial data that is submitted to regulators, specifically like municipal disclosures, things that are included in an ACFR, or they're submitted over to the EMA system for the Municipal Securities Repository Boards, and it has not only your financial statements, but then in the back, there's usually some sections that have what we call continuing disclosures, and it talks about information such as you sometimes under your bond covenants, you have rules and requirements that requires you to make filings to let your bondholders be aware that something happened. Those are usually governed specifically by your covenants. In addition to the fact that you normally have annual filings where the audit is included to meet that requirement. In some case, the annual audit, the ACFR, typically has all the requirements and that satisfies for the covenant purposes. In some cases, there's additional information that talks about maybe operational statistics or other items that are going beyond what's in that ACFR. So that financial data was often it's submitted typically in a PDF format, which is or considered an unstructured type of format. And municipal regulators and investors and analysts, they were really struggling to analyze that data efficiently and effectively because of the fact it was going in so many different directions. And then they were also looking at how their counterparts on the FASB side, on the SEC, how they were dealing with this. And it's like, well, wait a minute, they can get that information and they can structure it and do the analysis for whatever they want to do. Why is it entities on the local government, state government, things on the GASB side, why is it so hard for us? So what the FDTA addresses is by requiring those financial regulatory agencies from the federal government adopting what's called structured machine-readable formats for filing. So now, a lot of people think that, well, wait a minute, I have a PDF. Isn't that considered a structured machine-readable? Yes and no. We'll get to that in a little bit. So now the goal, of course, is to improve what they call transparency, accessibility, and consistency for rulemaking and reading that information across the federal agencies, and also what's out there, bro, in the municipal securities market. And something we'll talk about as well, and I think Anthony, we were chatting about this as we were getting ready for this as well. There are other types of filings that even if you're not subject to FDTA, the concepts that are in FDTA could apply into other areas of municipal filing and municipal reporting, such as what's called the GREAT Act. So we'll talk about it a little bit. So think of this as similar to what the SEC did with what's called XBRL for corporate filings on their Edgar system. The FDTA brings that concept into that municipal and public sector space. So, and again, remember that when we think of machine readable, a PDF is a starting point, but there are many different types of PDFs that are included in filings that are just purely a scan of a paper printout. And it doesn't have any, so you can't really read the data. Now, software has definitely gotten better to use what's called OCR, or optical character recognition, to read the document that's handwritten and interpret what those characters are so you can search for text. But again, it's not 100% foolproof. So, which is why PDF by itself isn't deemed to be considered machine readable by the Act. Now, this applies to what we call our federal financial regulators and entities under their jurisdiction. The big thing is this is requiring what's considered to be open, non-proprietary, machine-readable standards that are publicly available to the market. And it's designed to promote that interoperability and reduce the duplication of reporting efforts. Now, ultimately, this is about making financial data easier to access and analyze. It is not about adding new disclosure requirements. So we'll talk a little bit about this in a little bit. Okay, so did I go too far? No, I didn't. I'm good. There we go. So who does this affect? So entities that file with the MSRB's EMA system, so municipalities, school districts, institutions of higher education under the GASB, special purpose districts, you could be subject to this act and requirement. But if you and your clients, you don't do any sort of filing with the feds on EMA, because let's say, for example, your debt structure is just with a local bank, or there's a line of credit, and you're not filing with bondholders, you're not required to comply. Now, certain states have their own data tagging and filing requirements, like Illinois has for the comptroller. I know the state of Florida has their own data tagging for filed reports. This is separate from what those local jurisdictions and state jurisdictions are doing. So what does this really mean? Is that now for the CPAs in the audience, this really means advising your clients who do file now is to getting started preparing for that structured tagged submissions. And for filers, which is the issuers of the financial statements, it's output deliverable that you are producing at the end of the process and making sure that the electronic version is in compliance. So that's what we're talking about. So let's talk specifically about the rulemaking process, because this is where the Act can get very specific. So the FDTA, what it did is require those covered agencies to jointly publish proposed data standards by June of 2024. And these standards define the taxonomy, which is the tagging system, and those technical specifications for those filings. So the rule, as you can see on the chart here, the rule was saying that those standards were going to be published by July 30th, 2024. So the FDIC, but in this case, June of 2024 was when they were required to get things started with the joint rulemaking process. July 30th, 2024, FDIC released its first draft of those joint rules for public comment. August 2nd, the SEC released its versions of the joint rule, which, in all honesty, was nearly identical to the FDIC, which, considering the fact that they're all under the U.S. Department of the Treasury, not terribly surprising. August 22nd, the joint notice of those proposed rulemaking, where all those joint rule proposal drafts were assembled together, so it's literally the joint process. It was published in the Federal Register on August 22nd, 2024, that's when it's officially available to the public. So once that happened, there's a 60-day public comment period that ran from roughly the end of August through the end of October 2024. And it was the opportunity for stakeholders, including CPAs and municipal issuers, to weigh in on their practical concerns. And needless to say, there were a lot of practical concerns. There was a lot of support for certain areas of the Act, but there was also some concerns as well. We'll talk about that in a little bit. Now, the Act then mandated that the joint final standards, basically the final standards is then will be completed by December 23rd, 2024. And those standards would set the minimum tag sets, what we call metadata definitions, and certain identifiers. And we're going to talk about identifiers a couple of times, but a couple of things to think about. One is called an LEI, a legal entity identifier. That's one thing that has to be established with those standards. And then there's also instrument identifiers, or the ISO standards. Instrument identifiers such as if something is considered debt or equity, which in the municipal space is a little less, important for certain things, but it's out there. And then also standardizing the date format. If you've ever looked at reports from different issuers and different entities across the country, some use, 2 digits / 2 digits / 2 digits for the year. Some spell out the whole November 19th, 2025. So what this is doing is actually standardizing those data formats. You wouldn't think you'd have to standardize that, but really for something like this, you have to. Now, once those standards are then finalized, which is essentially what's supposed to be happening, then each regulator, such as the SEC, the FDIC, the Municipal Securities Repository Board, and all those other entities have to adopt those own rules for implementation. And the Act originally set a compliance deadline of December 31st, 2026 for entities to begin filing with this new structured format. And that was dependent on those final rules being issued, which hasn't happened yet. And this is where we're at in the process. So this is we're going to follow that in the state of affairs. So this chart right here that I've got on the screen is a good one to definitely keep an eye on, and it kind of gives you a little bit of a flavor of where things are at. So if you have your downloaded those materials, well, again, I encourage you to do so. But this is a good chart to keep an eye on what's been happening. So, all right, now, what exactly does the Act require? So the first thing is first, it's talking about data tagging for electronic submissions. That means filings have to be structured and machine readable using a technology and a taxonomy that's similar to XBRL. Now, while XBRL is considered to be a strong contender for what the SEC is going to adopt, and the FDIC, they're all going to adopt, because the SEC already uses it. The FASB already uses XBRL considerations when they wrote their own taxonomy. It's not the official adopted technology just yet. So, second, as I previously mentioned, it requires common identifiers, LEIs, ISO product codes, standardization of dates to make sure it's consistent across those filings. And we'll dive into what a tag actually looks like when we go into some of those examples. And again, the last thing here, highlighted this thing in different colors, so it's very sticking out on the ear. If I could make the screen pop and flash, that's what I would do. But it doesn't impose new reporting requirements, meaning that if you have to report this type of transaction or disclose this type of transaction because that's what you've got in your financial statements, this Act is not imposing new requirements. It doesn't change those GASB standards or add disclosures. It's all about the format, not the content. Okay, so let's go into a little bit of those details. So the first thing is first, data tagging for electronic submissions. That means is that the filings have to be structured and machine readable using a technology similar to XBRL. So I've got on the screen a couple of those ISO identifiers, and I'll talk a little bit about that. I'm not going to get too nerdy technical into this as well, but enough to give you a flavor of what the Act is talking about. So the joint proposed rules right now specify specifically ISO 17442 for identifying those entities. And we mean identifying, and it's literally identifying identifying who you are. What is, like, if you are, for say, the city of Chicago, for example. I'll use that since that's where I'm sitting today, Chicagoland market. Chicago would have its own identifier, a legal entity identifier number. And there would be other sorts of identifiers within the tagging. So you'd use UPI for what's considered swaps and security-based swaps. Those are those derivative investments that, some units of government get involved with, some of them do not because they're not allowed to by law. It just depends. So that's one thing that's out there. CFI, which is the classification of the financial instrument. Whether your instrument is considered to be a debt instrument, which a lot of in the municipal space issue debt instruments. Equity, which really is not applicable because governments do not issue equity instruments, such as preferred stock, common stock, etc., warrants. So the last thing here is FIGI, and that's for the identifying of the security that's on this filing is associated with, is identifying FIGI as what is the identifying information. Now, this is something that is going to have some significant repercussions with FIGI, is because a common identifier that is used right now is something called QSIP. So if you've ever done a filing right now and you look up, you want to find maybe the fair value of an instrument in the municipal space, you're going to usually identify that by the QSIP number. It's very common with EMA filings and lookups right now. Now, those date formats also, again, there is a basic format for all dates, which is using the specific ISO standard as well. And then geographic and currency codes. There are specific codes coming in from the U.S. Postal Service, and then specific country codes, and then currency codes as well. So all of that plays into effect with those, with what goes in the tagging itself. Now, as I mentioned before, is QSIP included? QSIP is not mandated under FDTA. And the reason is because it's considered proprietary. Somebody owns the rights and it's proprietary. If you want to file something with QSIP, you have to pay for it. Now, the Act requires that non-proprietary identifiers are going to be used to ensure open access and interoperability. Now, QSIP may still appear in filings for market purposes. It's not part of the required taxonomy. Instead, you're using FIGI and ISO-based identifiers are intended to replace the reliance on those proprietary codes that, like QSIP, are used for regulatory tagging. Needless to say, the QSIP organization is not very happy about this. We'll talk a little bit about that when we get to our section on industry reaction. All right, now let's talk a little bit about schema and taxonomy. Who's actually building all of this? So the FDTA requires that the joint rules include that fully documented schema and taxonomy for all required data elements. Again, machine readable and searchable with data definitions for each tag, and it maps each data element to its regulatory purpose for clarity. Again, open format, no proprietary software, closed standards. Who's developing the taxonomy? Well, its responsibility is that joint working group of federal financial regulators, SEC, MSRB, FDIC, the Federal Reserve, Treasury. There's a number of them that are involved with this, and they're collaborating to create a common taxonomy that applies across all coverings. Now, once it's finalized, each agency is going to adopt and implement the taxonomy within its own systems. Again, like for MSRB, within your EMA filings. Now, it means is that you should expect, and the CPAs in the room should expect a taxonomy similar to what's going on with FASB, but tailored to the GASB-specific municipal reporting. And it's going to define tags for financial statement elements, the footnotes, and other required information. Okay, so that's a little bit about what the Act is doing. Let's talk about the reactions to the FDTA. And I will preface this to saying that the reactions to this have been very strong, to say the least. Some of them pretty positive, some of them not so much. So the reaction base is really dependent upon your role in the financial statement reporting process. So to get things started, the GFOA took the comment letters that came in from the August through October comment period, analyzed the tone of the letters to organize them into buckets. And I've included, said if you're looking for that information, that's something that GFOA has, and they presented it at their annual conference in this past calendar year. It's a very diverse set of tones that they looked at. Sure, there were a lot of negative words that were used, but there were also plenty of positive tone used from certain levels of respondents. And of course, there were some that were pushing for the rule makers to add specific clarity on how this is really going to shake out. So, all right, so let's go into those buckets of the reactions. So the first thing is first, the industry reaction, the preparers. Yeah, as you can see on the screen, they didn't like it too much. So it boiled down into a couple of reoccurring themes within there. One, a cost or an operational burden that they're going to entities would have to do to get their deliverables and get it all tagged. There's a duplication with certain state systems that it's like, well, wait a minute, if I'm doing this already for the state, why do I got to do this for the feds? The cost for implementing certain systems. There was a concern that perhaps systems would require to be updated to have the technology bolted on, or maybe even just revise and adapt it, revise their systems to account for this. And then, of course, skepticism is there a real problem to solve? Yes, certain folks in the industry may see this as a problem, but we don't. So is there really something to solve here? So, so what I did is that for the next few minutes is that I took in from some of the reactions that came in from certain well-known industry groups. So this first one here is coming in from the GFOA, and I've included the link to their summary page. And on their summary page is a comment letter that they sent in for this as well. And they had a couple of very strong pointed comments that I included on the screen here as well. One, this is posing an unfunded mandate. Obviously, local governments, state entities, we don't like unfunded mandates because it's basically meaning you're making us do something, and it's going to cost us resources that are already in scarce supply. So that's going to be a problem. The GFOA did point out specifically the need about buying and implementing new software in some cases, Others need to take steps to reconfigure, and other things will have to just maybe bolt on. So there was some definite concerns from the GFOA. And also can create more confusion or reduce transparency of public information available, what the GFOA was talking about. Because of the fact that creating uniform standardized reporting and tagging across all entities such as states and counties and cities, example, that's a substantial challenge in and of itself. Just because, as we all know in this industry, everybody's got different fund layouts. Some people are using maybe perhaps a business type activities only presentation. Some of them are using only governmental funds. It's very, very diverse on how local governments and everybody in this space presents their financial statements. All right, now let's get in here as well. Oh, so GFOA, a couple other ones that they were talking about as well. Again, this is specifically talking about how, wait a minute, you're having the MSRB could potentially dictate the structure and content of disclosures as opposed to what GASB is doing, and that's not your job. It's basically, they're calling it almost like a federal, like an overreach from the federal government of, you're trying to make rules here and put things in financial statements that you don't have the authority to do. So it's essentially an overreach. And also the unrealistic time frame, which I can definitely talk about. One, it was troubling because of the fact that it was a 2-year turnaround time frame to get this from when the act was adopted to go to the joint rules, and then to get this thing out from 2 years, essentially 4 years from the final rules, and then after from the final rules, you got 2 years to actually implement this thing. Whereas they specifically cited that GASB often is taking 5 to 10 years to go through things in their work plan and their very robust processes when it comes to developing those statements. All right, the next key group here is NASAC, the National Association of State Auditors, Comptrollers, and Treasurers. Now they have a seat on the GASAC with the GASB as well, and they also had some very strong, very similar type of sentiments. Is the fact it's adding administrative demands to local governments. One state requires local governments to file systems in their annual filing system each year using structured data, and then again, over time, that state has structured data checks to make sure major errors are identified, whereas this doesn't necessarily have that information. And it could necessitate accounting system purchases or upgrades that are costly. It could require additional general ledger systems, establishing policies, and hiring and training personnel. So needless to say, right, NASAC wasn't terribly thrilled about this as well. So now let's go into bucket number 2. And this is what GASB had to say. And they didn't say yay, they didn't say nay. But the biggest thing they said is that, hey, wait a minute. We want a seat at the table to make sure that the rules includes their input, because of the fact that they're reinforcing that they've got a very robust due process on how they get standards out the door. It takes a lot of time, because they're going through and they thought through all the various variables are thought through, and cost benefit is also considered. So GASB was put that specifically out there as well. And now what they're doing to respond to this is that they've actually started what's called a voluntary digital financial reporting project. It's not a standard, it's something voluntary. And it's what GASB is doing is saying, okay, SEC, MSRB, excuse me, you're going to be wanting to put out some sort of a taxonomy on the rules. Well, you know what? We're going to get started on actually building out that, because the fact that, you know, we're going to be getting inputs from the FASB taxonomy, because the SEC designated FASB as the GAAP standard setters on the, you know, the for-profit side. But we're going to get started with this so that by the time you're getting things going, we've already got a taxonomy started, so that you can leverage this, and it's things we've already thought through, so that you're not imposing an additional burden on there as well. Now, the taxonomy project was added to GASB's technical plan in December of 2024, and it focuses on the basic financial statements, the notes, and the RSI. It's not the entire act through just yet. The original plan was that they wanted to get a due process document released to the general public for the commentary process by the end of this calendar year. That's not going to happen. The reason is because, as was noted by the GFOA, GASB got a lot of work to do. It's very complex. There's a lot of things that are happening. If you ever talk to any of the GASB project managers, that's what they'll tell you. So right now, the due process document is scheduled to be released in Q2 of 2026. Again, this is a voluntary reporting thing. This is not considered accounting requirements and reporting requirements, because that's not what the FDTA is. So it's kind of a side note on how GASB does things in their structure. And this is something that GASB put out, and it's an example of when you have something in a tag. This is what it looks like. Now, the project objectives, of course, is to build out that digital taxonomy that enables presentations of those existing GAAP requirements, and supporting digitization of those financial statements, and also having it be technology agnostic. So you can see on the screen, we've got a couple of tags. So a number here that is tagged. There are a couple of things that, in theory, a data tag would look like. It would talk about the properties, what currency it's involved in, the functional information, and it would be basically looking at the type of activity and other items that would be useful in reporting and tagging. Essentially, if you ever look, I said, at an SEC filing for Edgar, this is what comes up when you highlight something and it's tagged. It has a number of different things that pop up. All right, so now, industry reaction, of course. Now, what is not a taxonomy for GASB? So very similar in theme from the FDTA. They're also looking to make sure that this is not changing your reporting requirements. This is putting, again, digital reporting. It does not change the process of producing that initial ACFR during the audit. And it's theoretically not supposed to be requiring a change in the chart of accounts. But again, it's also, the taxonomy is also not a template, something GASB specifically said too. And GASB's position is that this is not going to require a new ERP system. This is essentially bolt-on technology or providing the ACFR to a third-party provider, and there are plenty of them out there in the market if you've ever dealt with anything in the FASB side or the SEC filing side. So you don't have to go out there and buy new technology. It could be bolt-on, or you could outsource and having it done. Although this could be an opportunity for certain units of local government to put in a new ERP system if you're dealing with an older ERP system that is with very outdated technology. It could be an excuse to essentially get caught up with the times. All right, so next thing is what was the industry reaction from the academics and the investors? Well, needless to say, the vast majority of them, they liked it. So that's why I got that little thing out there as well. Because the common thing is, again, PDFs aren't necessarily considered to be machine readable. There are many times where essentially, again, it's a print and a scan where you're not actually can't highlight data and you can't find information. Now, the other thing that a couple other things that have been coming out from the academics and the investor community is the fact that the fund structure that our local governments and state governments deal with is that it complicates the aggregation for analysis purposes as well. And that tagging unlocks the ability for different issuers to be compared and analyzed, because you're going to be able to basically compare apples to apples somewhat. Obviously not 100%, but this is designed to get you to that point. So that's why the investors and the academics really like this information. Okay, now this is from XBRL's 2024 comment letter. Now, obviously, they're the nonprofit standard setting organization. So I found this one particularly interesting because they're highlighting on a digital age is that nobody should seriously suggest that you're dealing with a PDF or anything on paper, which they consider paper under glass. And they're focusing on what the regulators are telling them and really driving on this as well. Now, obviously, XBRL has a vested interest with this process going through. They were actually one of the proponents of this when it got introduced and passed into law. So needless to say, they're a big proponent of this whole process. Now, the National Federation of Municipal Analysts, they also were pretty gung-ho about this as well, because it provides, again, they want accurate information for diversity and complexity for your issuers and your investors, and you fully capture the information about financial health and credit risk by integrating GAAP and non-GAAP, those reporting frameworks as well. But something else that I wanted to highlight here, and I got it specifically on the screen, is that NFMA was very specific and said, hey, look, this could introduce some switching costs for items like MSRB or items that are deeply integrated already with QSIP. And we also know that QSIP is essentially not going to be allowed under this as well. So reminding the rule makers to consider the market-wide costs and challenges dealing with this shift. So I was actually very glad when I saw that as well, because they're thinking about this. Now, something else that talked about here is that the rulemaking, it doesn't absolutely address those standards for multiple issuers because of those nuances with toll roads and healthcare, and making sure that the taxonomy reflects that unique characteristics of the various types of sectors. And also, they specifically said they still think that this is going to fall short on how non-GAAP financial information is incorporated alongside GAAP. Now, it's very interesting if you've ever looked at a public company and look at their file. There's a lot of information that is not related to GAAP. The auditors do not opine on it. There's a lot of non-GAAP information. However, the SEC governs what sort of non-GAAP information has to be included in there. The SEC does that, though, not the FASB. Now, on the GASB side of the house, now GASB, obviously, they're not looking at non-GAAP information. That's not their jurisdiction. So there's a lot of, again, positives and negatives, but a lot of just also play on, boy, where is this going to go here? And a lot of, we're not quite sure where things are going, and this is going to have a lot of thought. And this requires a lot of thought. So, okay. So before we get into the next section, let's jump into our second polling question. So Rachel, why don't you go ahead and pull that thing open? What do we got?
All right, so you'll see that on your screen now. Is your organization currently preparing to implement data tagging in financial statements? So right now we are looking at about majority no plans at this time. We'll say 36% not yet, but aware of the requirement. And we have 5% that, yes, implement is underway.
Okay.
So I'm going to give everyone just a couple more seconds. Remember to get that poll replied for CPE credit. All right. So no plans at this time, half of our group.
All right. All right. Well, let's talk a little bit about state of affairs. So Anthony, why don't you take this section?
Absolutely. Thanks, Matt. And as Matt kind of alluded to, there is a lot of unknowns when it still comes to FDTA, the digital taxonomy on that. So we are in a bit of a state of wait and see when it comes to what's going to come next, when it comes to these rules and how this is going to impact your financial statements, the preparation of your financial statements there. A couple of things that we would advise, particularly for those on, on the municipal side of things here, until you know what's actually required and what that mandate is going to be very wary of going out and investing significant resources on, on this, tagging or taxonomy type work for that there. You want to ensure that any upgrades to your ERP system, any modifications or changes to your ERP system, certainly there, that those are things that you are ensuring are going to meet the requirements there. And simply without those final rules in place, we just don't know as to what that's going to be for that there. As we wait and see kind of what that looks like there, Matt's kind of highlighted on certain things that we've seen in the past, certain things that we're all familiar with, QSIP numbers, for examples there, that are not acceptable under this, the guidance for this here, right? Because they are those proprietary pieces of information there. So again, understanding, what we do have and what we don't have there. Now, one of the big reasons that we are in a wait and see pattern here is we have, the current administration is very, deregulation focused on that. So, we don't necessarily expect there to be rapid movement in terms of pushing things out here, completing the rulemaking process there, issuing those final rules, establishing that timeline, et cetera there. So again, a lot of unknowns when it comes to the current state on that as well. Now, one differentiation that I think is important here, and I think it's good to understand, is this isn't an enacted law. This does have rules, that are coming for this there. So this is not something on the FDTA standpoint that the SEC can essentially undo from a rulemaking standpoint. There, it is a law. So different administrations, different focuses in the future on that could, activate this and move this forward and kind of accelerate the pace in terms of what we see on that. And it's anyone's guess in terms of kind of what the current administration will do with that, but it may be something that they do push forward on. This is different from the ESG rulemaking from the SEC that was rulemaking, but there wasn't an underlying law to support that there. So again, understanding that differentiation between the two is critical in terms of that. Whatever those final rules, if and when they do come out in terms of that, there will be kind of time periods and periods of time that you'll be able to implement, get the information in place for that there. Phasing these things in is something that we have seen when they undertake large scale projects for that there. So we would expect that to be part of the case for this as well. Now, maybe you're sitting here thinking, okay, well, I don't have any MSRB filings. I don't have to file anything in terms of this. I do my state work. If you have state regulations that you're subject to on that, but hey, I'm in the clear. I really don't have to worry about this. Well, we're gonna, if you're a college football fan, you know the phrase from Lee Corso, not so fast, my friend. And that's kind of where we're at when it comes to this. And Matt gave us a snapshot on one of the other rules that could impact the need for the data tagging and being able to do this, and that is the Grant Reporting Efficiency and Agreements Transparency Act, or the GREAT Act as it's named here. Now, for those of you that are Illinois local governments and are subject to GATA on this, this is not just GATA 2.0. This is the federal version of a larger scale version of this as well. What this is looking at, what the GREAT Act does, is requires data standards for grant reportings, primarily related to your single audits, things of that nature there. And if you think about it, guess what you often include in that data collection filing on that? Oh, your entire audit gets included as part of that document as well. So even if you don't have debt that requires you to file with MSRB and those disclosures there, you might still be subject to this under the GREAT Act there as well. So the biggest takeaway, the biggest advice, the best advice that we can give you at this particular point in time: monitor what's happening with the FDTA, monitor what GASB is doing with the taxonomy, familiarize yourself with the GREAT Act in terms of that as well, being able to understand what's out there, what may be required, and just keep an eye on it. That's really what you can do at this particular point in time. So the final piece that we're going to spend some time looking at today is we want to take a look at some of the examples of what this actually looks like in practice here. So we'll switch screens here, and we're going to come over and look at a different screen here. Bear with me as we navigate this and get the right set of information up here. All right, here we go. So what you have on your screen here, we're going to go through several different tabs here, but as Matt mentioned, XBRL has kind of been the adopted gold standard in terms of what's out there in the market right now for that there. That's what folks are familiar with on that. So when you go out and if you're doing a search for examples of tagged financial statements, more often than not, you're going to come across tagging that was done using XBRL for this here. The page I have up here, you can see there's a variety of different taxonomies that are listed here, IFRS, cybersecurity, different things that you can find as part of this. If you scroll all the way down to 2022, in the governmental world is where you have their ACFR taxonomy projects here and information here. And one of the things you'll find, particularly as it relates to local governments, is there's not a whole lot out there when it comes to tagged financial statements on there. There's been, as Matt noted, some state requirements for organizations that have put things in place there, but the overall timing on that has been extended and pushed back several times on that. As we see at some of these examples that we'll go through, some of these are um, pretty dated in terms of that. And there was a big push for this back in 2017 through 2019. A lot of data that went into it there, particularly, and we'll show you an example here as well, related to a project at the University of Michigan at the Ford School of Public Policy here. So they did a standard in terms of looking at open data. This is a paper that's available on their website here. Close Up is the organization. Their Center for Local, State, and Urban Policy is part of this as well. And they went through and did a detailed analysis of using XBRL and their particular example of how governments could go through this process here. I think it was interesting. If we look at one of the pages in here, you kind of see there's a lot of information in here. There's a lot of discussion. They do talk about the GREAT Act as part of this as well, and highlight that information there. They provide some examples, some references for you in terms of states that have put in place some sort of legislation related to this or status of that there. And then ultimately they close talking about what are some of the potential benefits of going this route, what are some of the costs associated with that as well. They have different information on here as well, different page that you can see here. They also did as part of that process, and more recently in 2025, revisited some of this and did issue a free tool to help with this process there as well. So something that you can take a look at there, and we can provide that link as part of our follow-up on this should you be interested on that, but you can find the tool here as well. It's a template that you download, essentially uploading your information there, and you can kind of see and play around with that yourself if you're interested in learning more about that data tagging process there. But ultimately, what do tagged financial statements look like here? So again, some older information here in terms of what's available out there for public consumption on this. But if we look at the city of South Haven up in Michigan here, you can see here is a XBRL prepared financial statements using an inline viewer for this process. As part of this here, we can look at, there's a variety of data here. Now, they have not published a full set of financial statements using this as well, so they have excerpted information here. So you'll see that. But what happens is when you come in here and when you click on these respective lines here, you get these different tabs and you get this different information here as well. So you'll see this is the attributes for this particular one, pooled cash and investments, that has a variety of information that's prepared and included as part of this as well. Again, part of that ACFR for the period that it impacts, the amounts here, et cetera there, what type of balance it is, the positive, it's a positive sign here from a reporting or a balance sheet standpoint there, how those are being measured in US dollars, for example, there. If you click through here, different information, so the labels that they have in here as well. So for this case, pooled cash and investments, they have the documentation here, what that label looks like, no additional reference data included here. And then finally, just some additional calculation data here as to where that falls into it, how that plays into the overall data tagging, and again, making it, putting it into that machine readable format here. Looking at a separate example here, organization that we've worked with in the past, Oakton Community College, they have did this information and were part of this project back in several prior years as well. Same thing here. We look at those cash and cash equivalents. So in this case, they are a business type activities model here. So a little bit different language in terms of what you see in terms of that presentation there. Again, your definitions, any additional notes here. So in this case, they reference the the gaffer as an the GFOA gaffer as an example for that, who published that as well. So not an authoritative gap there, but again, putting that reference information in there as well, and then a debit type balance in part of that process as well. The last piece kind of Matt mentioned was on the SEC side of things here. So pulled up a 10K here for a little known company out of Seattle called Microsoft. You guys may have heard of it, but looking at Microsoft data here again, looking at their income statement here, similar process here, right? This is their in this case, their data is in millions here, so you see their $64 billion in revenue there for the 12 months ending 6/30/23. Where do they fall as part of the the member from the standpoint, reporting standpoint there. Again, all of the underlying data that goes into it tells you here what that information is. But again, being able to do that and being able to pull that information, in this case, a direct URL to the FASB and the accounting standards codification linked directly into this filing here. This is directly off of the SEC website there as well. So again, there's a wealth of information out there. Some of it more current than others, depending on what the requirements are and where folks are as part of that implementation process there. So again, I'd say take that with a proverbial grain of salt in terms of what you're looking for, in terms of what is current and what you're navigating as part of that. With that, we're going to go ahead and switch back to our deck and wrap things up for today. So we talked about the within local government, within SEC filings here. Let's go ahead and launch our third and final polling question of the day.
All right. You will see that poll now. What systems or software does your organization use for financial reporting? So we have custom-built internal system, off-the-shelf government finance software, Excel-based manual reporting, and other. So right now, our Excel-based manual reporting is at the top. It's hard to let go of Excel sometimes.
Well, in this case, the nice part about Excel is that you don't have to spend extra money to do it within Excel for that there, and that's kind of what we would expect to see, and honestly what we would encourage until there's some more clarity in terms of what these rules are going to look like, what these requirements are going to look like, and what that needs to be from a go-forward basis there. So,
yeah, so I've closed that poll, and leading is the Excel-based, and then runner-up is off-the-shelf government finance software.
Excellent. Thank you, Rachel. So with that, that concludes our session for today. Hopefully this has been a kind of a good refresher for some of you, or a good intro to FDTA, what GASB is doing on its digital taxonomy project, what some of the feedback has been so far in terms of the information that's been out there. With the rules that eventually come out there, again, monitoring those, understanding those, this is something that you want to get out ahead of. This is not a wait until the 11th hour when these rules do come out and try to start doing this here, because you will find yourself significantly challenged to do this in a manner that's going to be timely, even with the best systems that are out there. This is going to be a process that our expectation is that it's going to be somewhat labor intensive, as Matt noted, depending on what side of the pros or cons you're on related to this type of project for that there. Some people are saying, no, there's no additional cost here. It's a simple add-on to your accounting system. And others, interested parties here are saying, no, you're going to have to completely, revamp your system or add on modules and incur significant cost and people costs for that as well. One of the things that we hear about regularly in the government space is an unfunded mandate on that, and that was what a lot of the feedback was on this during the comment period on this as well. Is great, just another rule that we have to abide by. How do we pay for it? And so being understanding of that as well, being smart in terms of how you spend those dollars as well. So if you do have any questions, I know we don't have any so far in terms of this, but you've got Matt and I's contact information on the screen here, so we're as part of the downloadable materials as well for you. So we're always happy to entertain any questions that you do have. Matt, any final closing thoughts on your end?
No, it's funny if you look back at that SEC filing and you click on it, and obviously that's just one column, but the biggest challenge I always think about that, especially when you're thinking about taxonomy, is that with a government-wide presentation on cash, you're talking about multiple different funds. How does that taxonomy drill down into those multiple funds? How's that going to work? Because it's very different. So that's just part of the angst that a lot of issuers and preparers are having with this as well, and it's well-founded in my opinion. So, but now, other than that, we've talked about it a couple of times. monitor what's coming out from the pipeline from the rule makers, and keep an eye on this, and make sure that you're making sure that you're able to react with agility with this. Don't try to do something like this at the last minute, because that's just when any standard, it doesn't really matter what you're talking about here. You try to do something at the last minute, it usually doesn't go very well.
Oh, absolutely. So, all right. Well, we're right here at the bottom of the hour on this. It's Matt. It's like you and I have done this before. So, well, thanks to Rachel and Rachel, our behind the scenes team on this, for all of their efforts in coordinating and facilitating these. We hope to see you in December, as Matt teased earlier in our session today, for our final session of the year. And hopefully see you there. Wishing everyone a happy, safe, and healthy Thanksgiving. And thank you all for attending.